Hello, everyone. We're going to get started here. It is 6 o'clock. So first, I just wanted to welcome all of you to our second series and webinar series. And the topic tonight is Able Accounts and Special Needs Trusts and what you need to know. So we hope this will be really enlightening for some of our professionals and family members who are gathering information for either a client or a loved one. Before we get started here, I always do like to ask how you hear about these events, if you're a family member or a service provider. So I am going to use some polls off and on this evening. So I'm going to go ahead and launch our first one. If you could fill that out, I'd appreciate it while we're going through just some housekeeping items to start. I did want to let everyone know that this presentation is being recorded. The recording and slides will make available on our website. So that way, if you have questions, you can always go back and look, or perhaps if you have to cut it short or someone you think could benefit from it, you can share that with them. We have disabled participant audio, but I have re-enabled chat because I found that it's sometimes helpful for people to kind of introduce themselves if you want to chat with other participants. We also have the Q&A section, so I'll be monitoring that throughout the webinar. So if you have a question, make sure to put it in the Q&A section so I don't miss it. And any questions that perhaps aren't answered live tonight, we'll follow up with you by email to get those answered. And then, later on, if you find that you come up with a question, you can always submit those to us at info@arcare.org, and we will be happy to try to get you some answers here. All righty. So I'm going to go ahead and end this poll here, and we're going to get started. So first, I also wanted to share about another upcoming event we have. Our next event in this series is actually going to be a hybrid event. So if you are in the Kansas City Overland Park area, you have the opportunity to attend in person at the Johnson County Public Library. We will also again be hosting that online by Zoom. So if you're not in the area, you can always join us that way. And this is going to be on person-centered financial planning. So a lot of times, we talk about person-centered, care and holistic approach. And so this is going to, this webinar is going to kind of dive into what that means and the information that families and professionals need in order to really make a thorough financial plan for you or your loved one. The presenters for that particular event is Peter Wall, who's the Director of Fiduciary Services for TrueLink Financial, which is a national company that specializes in financial tools for individuals with disabilities. And of course, Barb Helm, the Executive Director. Hope you might be able to join us for that event. Registration for that should be going live at the end of this week. So I will share that with all of you when it is open. All right, so we're going to dive right in here. Able Accounts and Special Needs Trust. So we always kind of start off by talking about what's in your financial toolbox. It's an analogy that we have found really works well with our families because there's all sorts of different savings tools that you can utilize to enhance your loved one's quality of life or your quality of life. But each tool has a specific purpose to get you to a specific outcome. And so knowing what tool is best for your specific situation is really important. And that's why we're hosting these events to try to share this knowledge with everyone so you can make appropriate, financial decisions for you and for your loved ones. So we're going to start off with Able Accounts tonight. So Able Accounts have been since 2014 with the passage of the Achieving a Better Life Experience, or ABLE Act. This act was supported by over 70 different organizations nationwide. It had a huge bipartisan support in the House and the Senate. And it was one of the pieces of legislation that really kind of shone a light on the true issue of individuals with disabilities being able to save and enhance their quality of life. So it really kind of brought that conversation to the forefront. So we're going to talk about ABLE accounts and the eligibility. So the first eligibility requirement is the onset of disability has to have occurred before age 26. So if you're an individual, perhaps your onset of disability wasn't until, age 30, 35. Unfortunately, right now, you are not eligible to start an ABLE account. The onset of disability before age 26, you can certify that in a few different ways, which I've listed out here. Either, you have someone who is on SSI based on disability before age 26, or they're entitled to receive disability insurance benefits based on disability before age 26, or someone who has certified, or their parent or guardian has certified that they, have had not only a disability, but the onset did occur before age 26. So the Social Security Programs Operation Manual, which kind of is the go-to for all Social Security and how they kind of make decisions and their regulations. It defines the beneficiary of an ABLE account as the individual who owns the account, was eligible when the account was established, or succeeded the former designated beneficiary in that capacity. The designated beneficiary is different than the individual, sometimes different than an individual with signature authority. So a person with signature authority can establish and administer an ABLE account for a designated beneficiary who may be a minor or otherwise incapable of managing the account, but it is not the equivalent of ownership. Social Security has been very straightforward and very clear that the beneficiary, the individual with a disability, is the owner of the account. Moving forward, we're going to talk about, again, who establishing administers those. Right now, the regulations adopted by each state vary at this time as far as who can open an account. Currently in Kansas, only the individual with disability, their agent under power of attorney, or their legal guardian or conservator can establish an ABLE account. And not only that, the guardian and conservator must have explicit authority from the courts to be able to establish the account through their letters of guardianship or conservatorship. This has created a hurdle for a lot of our families whose letters of guardianship do not explicitly state that. So they had to go back, petition the court to revise those. And so it's been a little bit difficult to navigate that currently in the state of Kansas. However, in October of 2020, the IRS released their final regulations that provide guidance and oversight for these specific types of accounts. And the federal regulations put forth kind of what we refer to as an expanded hierarchy of who can establish and administer an account. So now the final regulations read that the beneficiary can either designate someone if they're unable to establish their own account. It can be established on their behalf by the individual, their agent or power of attorney, or if none, a guardian or conservator, spouse, parent, sibling, grandparent, or representative payee who's appointed by the Social Security Administration in that order. Now, I want to pay attention to that last three words of that phrase because it is very important to understand. This is a hierarchy, meaning that, we have to go with whoever has the highest ranking in the hierarchy. So perhaps, a parent may also be their legal guardian. According to the hierarchy, you cannot circumvent the requirement of having that information in the letters of guardianship, conservatorship, or getting court approval to open the account just because you're the parent. the guardian or conservator ranks higher, so they would have the authority to open the account. Same as you move down the list. Perhaps a sibling or a grandparent, is a power of attorney. They would do that with the authority of a power of attorney, not necessarily their ranking as a sibling or a grandparent. And same with a rep payee. So a rep payee is kind of the last, I don't want to say last resort, but kind of a last option for individuals in order to establish the account if they don't have anyone else available to act for them and they are not capable of setting it up by themselves. We also put in here a link to the actual IRS publication if anyone is interested in some light reading. But again, these are the final regulations. And when this came out, they gave all the states a deadline to basically adopt these standards or risk losing the state's eligibility as a qualified ABLE program. And so Kansas just recently passed House Bill 2490, which is effective as of July 1st. This adopts that expanded hierarchy. So again, currently we talked about you have to be the individual, an agent under power of attorney or guardian or conservator. If you are none of those after July 1st, if you rank lower in that hierarchy, you're going to be able to assist someone. This bill again had huge bipartisan support in the Kansas House and the Senate. We at Arcare were very proud to have testified in front of the Senate committee and in front of the House committee in support of this legislation, because not only did it expand the hierarchy, but it brought us in compliance with federal regulations. If for some reason the state wouldn't have passed this before the deadline, which the deadline was November of 2022, if they wouldn't have passed it, the current Kansas ABLE account holders would either, have to move their account to another state agency, a state ABLE administering agency, or risk, running the risk of jeopardizing their benefits because it's no longer a qualified account. So we were really, really appreciative of the state treasurer's office for putting this forward and all the work that they did to get this passed. The legislation language also gives their office, the state treasurer's office, who administers ABLE accounts, the flexibility to change the program as federal changes occur. So if for some reason the federal regs change again, we don't have to go back in Kansas and get another bill passed. They're able to just now change as the federal regulations change. And the current treasurer's office is establishing the criteria for authorized representatives in assisting in opening an ABLE account for an individual. So again, if you're a spouse or a parent, they're going to establish the criteria and the process for kind of how to move forward with that. And we're hoping that this fall, after this rolls out, we'll be able to perhaps do a second event with them promoting ABLE accounts and then walking everyone through kind of how to specifically open one in Kansas. So we talked about just recently about, the ability of Kansas to change regulations as they occur. And this was another reason. The National ABLE Age Adjustment Act. So this was introduced in 2019, and three of the original co-sponsors included Senator Moran and Senator Roberts, both from Kansas. And then 20 additional senators signed on to co-sponsor. That legislation was reintroduced in February 2021. So we're still advocating for that on the federal level. And what this act would do is raise the age limit from 26 to 46. So that would help individuals whose onset happens later in life still be able to qualify for opening one of these accounts. Again, currently it is age 26 or before, but this would expand that to age 46. And I want to point out that part of the reason this came up was a lot of our veterans. You think about, those who have served and perhaps have a service-connected disability that didn't start before age 26. Currently, they're excluded from being able to open an account. This act would actually open the ABLE account and allow over 6 million more people, and that includes 1 million veterans in the United States, to access this entitlement. So we, again, are really pushing for that on the federal level, and we hope, pretty soon that will get passed. So what can be contributed to an ABLE account? So we kind of talked about who can set it up, who's eligible, who can help them administer and set it up. So what can be put into the account? So there's 2 limits to keep in mind. There, in a calendar year, you can deposit up to $16,000 from any source. So that includes family members, that includes friends, that includes your benefits and unearned income. Now, unearned income is, again, any income that's earned by not working. So this would include your Social Security benefits. This would include pensions, state disability payments, unemployment benefits if you're receiving those currently, cash from friends and family. And then if you work, you can also deposit up to $12,060 of your earned income. So this means an individual who has a job and works and earns income could have up to $28,060 go into their ABLE account in a year. If you do not have a job, your ABLE account limit in a year is $16,000. And then, of course, if you earn less than that $1,260, say you only earn $10,000 a year, your limit would be that $26,000, the 16 plus the 10 that you earned. You wouldn't get the extra, $2,060 limit on the other side for unearned income, if that makes sense. So this is also important to keep in mind. A lot of people ask, okay, well, do I have to keep track of that? What happens if we go over that limit? And that is what the treasurer's office or the administrators of the ABLE account, that's what they look out for. So they track that. And if for some reason an individual goes over or reaches that maximum, they will simply not allow any further deposits throughout the year. So while it's something to keep in mind, that is not necessarily something, that you need to worry about right up front, because they will monitor that and track that. So other key features about ABLE accounts. Contributions, again, can be made by any person, and that would go towards that $16,000 a year limit. That, again, is friends, family, anyone who wants to kind of support the individual in their quality of life. Income earned by the accounts, interest income, are not taxed. That's a huge advantage to a 529 or ABLE account. And then account withdrawals for qualified expenses are also not considered taxable income. So there's a lot of tax advantages to utilizing an ABLE account. So we just talked about anything used for a qualified expense. So let's talk about what a qualified expense is. What can you use your ABLE account for? So qualified disability expenses are any expenses made for the beneficiary related to their disability. So this also includes education. It also includes housing expenses. And let's point out, this does not count as income or in-kind support and maintenance for Social Security purposes. We're going to kind of get into that a little bit later here. Transportation expenses, employment training, financial management, legal fees, prepaid funeral burial expenses, any expenses for ABLE account oversight, and basic living expenses. So the Social Security Administration did come out and point out a specific regulation that says for ABLE purposes, food is considered a qualified disability expense. It's considered a basic living expense. This is again contrary to in-kind support and maintenance or unearned income in the form of food or shelter that would impact an individual's SSI. So I do have the regulations in there for that, but we're going to keep kind of talking about this a little bit, and we'll talk about it a lot more when it comes to the trust side as we kind of compare and contrast these. So the other important thing about ABLE accounts is to understand that having an ABLE account still allows you to maintain eligibility for other benefits, and specifically means tested benefits, SSI, Medicaid, things like that. Even housing, we'll talk about that too. So specifically for SSI purposes, the first $100,000 in the ABLE account is excluded as counting as a resource. So as long as an individual's ABLE account is below that $100,000 threshold, their SSI will continue business as usual. If a beneficiary is receiving SSI and perhaps their account balance goes over that $100,000, the SSI payments are put into suspension. And then if the individual, continues to make disbursements from that account and utilizes that money and it drops back below that $100,000 threshold, they simply notify Social Security. Social Security takes that suspension off, and the suspension ceases and your benefits resume. They do not have to reapply for SSI benefits once the account drops back below that $100,000 threshold. So that's also important to know. I will also point out, this sounds amazing, right? Having $100,000 in an ABLE account. The current average balance of an ABLE account in Kansas is just under $9,000. So I know that was kind of a startling figure for some of our legislators to know, because they were a little worried, someone with $100,000 could easily be taken advantage of. But at the same time, having the ability to have that financial freedom to be able to utilize these funds for things that they wouldn't be able to pay for otherwise is really important. So let's keep talking about eligibility. So for Medicaid, specific rules apply for them as well. ABLE account balances and withdrawals are completely excluded for the purpose of Medicaid and other benefit programs. So they do not lose their Medicaid eligibility based on assets in their account, or even if they go over that $100,000 limit and their SSI is suspended, their Medicaid will still continue. So in Kansas, the maximum amount that can be placed in a 529 plan, which is what an ABLE account falls under, is the 529 plans, is $435,000. So if contributions exceed $100,000, SSI eligibility would be lost. But as long as the account remains below that $435,000, that's specific for Kansas Medicaid eligibility, their eligibility will continue. So that's also important to know, as an individual accrues that savings, and they're working on saving, perhaps that maximum 16 or 26,000 a year, they can build that account up pretty quickly. And so being able to know that their Medicaid benefits will continue is a huge peace of mind. And then for other means tested, especially, we talk about Section 8 housing or HUD program housing. So the Housing and Urban Development, they came out with this memo in 2019, a policy memo that specifically states that an individual's ABLE account, its account balance, contributions, any distributions, all of those are excluded, completely disregarded when determining their eligibility and continued eligibility and occupancy under means tested programs for housing. This is one of those things that you know, our caseworkers, guardians, and we get a lot of parent calls about this. You know, we went to, you know, reapply or recertify, and, you know, they're telling us that we're no longer eligible because of our ABLE account. We basically send this memo straight to them, and then, you know, they realize that there was a mistake made. So that's important for families to know how this can and cannot impact their benefits. So the other thing that's important for families to know about ABLE accounts is how Medicaid payback may come into account. So the federal regulations are that in the event the beneficiary dies with funds remaining in their account, that the state has the option to recoup, and that is done through estate recovery or Medicaid payback. And the amount of that payback would be calculated based on the amount paid after creation of the ABLE account. However, in 2018, Kansas completely eliminated that payback provision. So as long as the individual is residing in the state of Kansas, no Medicaid payback would attach to that account. If you are perhaps residing in a different state or thinking about moving to a different state, you know, the National ABLE Resource Center can provide you with state-specific information. There's a really cool state comparison tool where you can pull up, I think, up to 3 different states and compare their ABLE, you know, requirements, well, not requirements, their ABLE, sorry, the word is lost for me. Their ABLE specific information on Medicaid payback and how to administer and things like that. So we did have a question come up on chat. If ABLE accounts exceed 100,000, would SSDI benefits be affected? The answer for that is no. It's only the SSI benefits that would be placed in suspension. So thanks for that question here. So now we're going to talk about special needs trust, and then we're going to do a lot of comparing and contrasting of the two. I've got some charts here we'll kind of pull up, so hang with me. If you attended our special needs trust basics webinar, this will be kind of a little bit of a review for you, but not as in-depth. So if you haven't seen that webinar and would like to go back and watch it, it should be available on our website. So again, we're talking about our financial toolbox, right? So a special needs trust can be divided into kind of 2 financial tools or 2 categories. So if the source of the funds for a trust is from someone other than the person with a disability, the trust is a third-party trust, and that's what we consider a proactive tool. A lot of times those third-party trusts are set up through a parent or a grandparent's estate plan. They've done that planning ahead of time. They know how it's going to be dispersed to the individual. It's a proactive tool that families use in the financial planning side. And then there's the case that if the source of the funds are from the individual with a disability, it's a first-party trust, and that's a reactive tool. We'll kind of talk a little bit about situations where an individual may be over-resourced, and this might be an option for them to be able to preserve those excess resources rather than have to go down into a spend-down situation or risk losing their Medicaid benefits. So we'll talk about third-party or estate planning special needs trust. So again, it's a trust established by someone other than the beneficiary, a grandparent for a grandchild, parent, sibling, or anyone who wanted to leave money to a person with a disability. Again, most frequently funded after the grandparent has died through their estate plan. A third-party trust has great latitude. At the time the beneficiary passes away, it can be left to anyone that you wish. There's no limits on how much can be placed into a third-party trust, and there's no age limit for the beneficiary. So we talked about ABLE accounts and how they have to have that age 26 or before onset. A third-party trust, that age limit does not apply. Now let's talk a little bit about a first-party trust here. So for a private first-party trust, the individual has to be under age 65. It has to be the asset of a disability. They have to meet the Social Security standard of disability. The trust can be created by the individual or their parent, grandparent, guardian, or court on their behalf. But again, the asset is the individual with the disability. It also has to be for the sole benefit of the individual. The trust also has to contain payback provision language that to the extent the amount remaining in the account upon the death of the beneficiary, has to be paid to the state. And then for a pooled first-party trust, or a D4C trust is one that's established and managed by a nonprofit organization. A separate account is maintained for each beneficiary, but for purposes of investment and management purposes, the trust pools the accounts together, hence the name pooled trusts. Accounts, again, are established solely for the benefit of the individual with a disability. And then this also has that Medicaid payback provision. So we will talk about, I did want to bring this up too, because there was a little bit of confusion in one of the previous presentations we did. And we wanted to clarify about the Trust Fairness Act that was passed in 2016. So this Trust Fairness Act corrected an error that was made during in the Omnibus Budget Reconciliation Act of 1993. So prior to the Trust Fairness Act, an individual with capacity could not establish a private first-party trust. It could only be established by a parent, a grandparent, or a legal guardian or a court. And then the pooled trust could be established by the individual or any of those options. So again, this was corrected in 2016 to allow the individual to be allowed to establish a private first-party trust as well. So we talked about pooled trust, we've talked about private trusts. I wanted to again reiterate, a pooled trust is a trust, and it is a regulated trust and allowable as far as it goes with Medicaid eligibility and continuing those benefits. The Social Security Administration sometimes refers to a pooled trust as a master trust, again because it contains the assets of many individuals, each in separate accounts, and each with the beneficiary. So we think of it as a bank that holds the assets all together in one place, but each individual, has their individual account, and those assets are held that way. So the thing about a pooled trust is a lot of times it's cost effective. There's little to no attorney fees to establish the trust. You don't have to have an attorney draft a separate document. Again, we have the document prepared, and everyone just executes a joinder agreement to join the pool, and then we would provide that information to the Medicaid agencies. So instead of paying an estate planning attorney to draft a separate document, this saves you a lot of time and funds actually. And it works well for individuals without family or someone to serve as trustee for a private trust. The trust is always, for a pooled trust, is always established and administered by a nonprofit association. The beneficiaries would also communicate directly with the nonprofit. So like our agency, Arcare, we have social workers on staff. So we are, well-versed in public benefits. So if there's ever a question, we can help the beneficiary kind of navigate that. And, again, often offer case management and other social services. So we talk about a pooled trust, and I put this up here because I'm a visual learner. So sometimes it's helpful to kind of break it down this way. So for a trust, this would be a trust of several separate sub-accounts, each for specific beneficiaries. So contributions and disbursements are always tracked separately, even though the account balances are pooled together simply for investment purposes. So here it shows you again, each individual account holder or Brian Jones, Johnson and Smith, at any given time, we know exactly how much they have in their trust account, their trust sub account, what it's been used for, et cetera, et cetera. So this is a very handy chart that we've put together that kind of compares and contrasts some of these trust options. So at the top, we've of course got the third party, private or pooled, and then we've got the private first party and the pooled first party. So again, as you're kind of reading through this, the third party, trust is pretty straightforward. The private and pooled trusts, are pretty straightforward as well. I do want to again bring up the age limit line here. So there is no age limit for a third party or pooled special needs trust. For a private first party trust, it has to be established and funded before age 65. And for a pooled first party trust, again, administered and established by a nonprofit, the age requirement varies state to state. Kansas allows individuals over the age of 65 to establish a pooled first party trust. So again, an individual who, has excess resources at age 68, they can't establish a private trust, but they can establish a pooled trust. So what are some of the uses, or, how are those funded? So we put down here in the uses tab, kind of the more common scenarios. So a third party or private or pooled is normally a parent planning for a child with a disability. It's an inheritance directed to the trust, a life insurance policy directed to the trust, or IRA directed to the trust. For the private and pooled first party trusts, often again, those have to be established with funds that are the individual with disabilities assets. So perhaps they receive a personal injury settlement and then they're over-resourced. They could establish a first party trust. They have an inheritance or life insurance where maybe parents or grandparents didn't do the planning process and work with an estate planning attorney to have a trust set up or have it directed to a trust. So it went to them outright. They can put that into a first party trust to preserve it. Other court settlements, retroactive benefits, if you get a back disability payment, all of a sudden you're over-resourced, et cetera, et cetera. So special needs trust, what can they be used for? So again, we talked about the qualified disability expenses for an ABLE account. It's a lot of the same types of distributions. This is not by any means an all-inclusive list, but this is a pretty good start. So cable, camp tuition, clothing, household items, furniture, internet access. Right now, internet is not considered a utility. So that is an extra thing that can be paid for out of the trust. Massage therapy. A lot of times individuals benefit from massage therapy, but it's not covered. So this would be, a way for them to be able to utilize those therapy benefits while having a way to pay for it. Any dental care, medical care not covered by another source, not covered by Medicaid or supplemental insurance. Let's see, vacation expenses. Say they want to take a vacation to see a family member. The trust could be used to pay for those expenses. So again, not an all-inclusive list by any means. So what can the trust funds not be used for? So we typically have two rules. Don't distribute cash directly to the beneficiary, and discourage payments for food or shelter if they are an SSI recipient. And why is that? Because it's considered in-kind support and maintenance, which again, for SSI purposes would reduce their benefit. In-kind support and maintenance includes rent, gas, electric, water, and waste disposal. So we'll talk about this a little bit because again, I think it's important for everyone to kind of know. So for in-kind support and maintenance, it includes, again, food, shelter, or any items that they use to obtain food, shelter, and clothing. Shelter, specifically defined, is room, rent, mortgage payments, property taxes, utilities, and garbage collection services. So we're going to talk about the impact of this on an individual. So Tom receives SSI. He lives in an apartment by himself. A trustee of a pooled trust makes a one-time rent payment of $350 for Tom. So according to the Social Security Administration, this shelter payment is considered in-kind support and maintenance, and it would be counted as unearned income and reduce his benefit by 1/3 for that month. And that 1/3 is the presumed maximum value rule that's attributed by the Social Security Administration. So this, again, in-kind support and maintenance, this would be us paying a bill, right? So the impact of unearned income, cash, we talked about never distribute cash directly to the individual, and this is why. So it is considered unearned income. So the first $20 would be disregarded, and after that, it would reduce their SSI payment dollar for dollar. So it has a much higher impact than a one-time, shelter payment may have. But again, it also depends on the individual's, benefits. So there can still be flexibility in spending with special needs trusts. For instance, our organization utilizes prepaid debit cards that are offered by TrueLink Financial. So, an individual, comes to us and says, hey, I would like to use some of my trust funds to buy new clothing. Can I have, a couple $100 on my prepaid card to spend on clothes? And we get that set up for them. And of course, they have to provide receipts and documentation of what it was used for. So we can provide that information to Social Security or any of the other administrations if requested. But that does give them a little bit of flexibility in their spending, because while we can't give them, $200 outright to go spend on clothes, we can still allow them the financial independence to do some shopping on their own while following the regulations put forth over the trust. So again, let's talk about Medicaid Payback, because I want to kind of compare and contrast this, because this is where a lot of individuals have questions. So ABLE accounts. Again, while there is the option for a state to recoup, Kansas has eliminated the payback on ABLE accounts. A third-party trust, again, has no Medicaid payback. A first-party trust, whether it is pooled or whether it is private, has the payback provision, all Medicaid paid during the individual's lifetime. So I wanted to, again, kind of reiterate that with everyone. We've had a couple of questions here about some beneficiary designations. Can a beneficiary be named for an ABLE account? Of course. It would essentially be, again, if you lived in a state where there was Medicaid payback, that would be first and then distributed to anyone else that you have listed. In Kansas, since that is eliminated, you can name a beneficiary a beneficiary to that in the event of their death. Let's see. Can ABLE funds be moved to S&Ts? We're going to talk about that a little bit, and that is actually coming up just here shortly, and how ABLE accounts and special needs trusts can work together. So one of the things that we always talk to our families about when kind of deciding what's best in my specific situation, an ABLE account or a special needs trust, it is a balancing act, and it's important to involve your circle of support and professionals, your tax accountant, attorney, estate planning attorney, financial advisor, to focus on all the options, and especially tax options. Because one big value of an ABLE account is that it is tax-free. It's probably as simple as it gets. A special needs trust can often qualify as a qualified disability trust. So distributions would be deductible at the beneficiary's tax level, but that may require a separate tax return for the trust and a separate tax return for the beneficiary. So it's important as you're planning this out to really kind of know, what your situation is and what's going to be required of the trust. I will say it's another good idea as to why you might, involve a professional trustee because they're used to dealing with that. They know how to do it. And so it's often a lot easier for them to manage that rather than a family member. So we're going to do a couple case studies here to kind of, again, compare and contrast some ABLE and special needs trust scenarios. So this is the $10,000 inheritance dilemma. So Bob has a disability that occurred before age 26 and is on SSI and Medicaid. He inherited $10,000 that was not directed to a third-party S&T. What are his options? He can spend down the assets in the month of receipt, go into a spend down situation. Maybe he, wants to upgrade a lot of furniture or something. There are options for spending it. And if that's not an option, he can establish a first party payback trust, a private or a pooled trust. In this situation, I would assume that a pooled trust option would be the most cost-effective option for him, rather than paying a separate attorney to draft a document for him to sign, and then, paying a private trustee. And then the other option would be to put the $10,000 into an ABLE account. So he has a few options here, right? So he just has to decide with his circle of support what the best option for him would be. So let's talk about another situation, a personal injury settlement. So Jane has a disability that occurred before age 26 and receives SSI and Medicaid benefits. She's awarded a personal injury settlement of $30,000. What are her options? So again, she can spend down, while that's probably not advised, to spend, $30,000 in 1 month. It is an option. She can establish a first party trust. Medicaid Payback would attach to that trust. She could put it all into an S&T. For ABLE, she cannot use the ABLE account for the entire amount. Remember, there is that $16,000 a year contribution limit. So she could spend down to 16 and then put the rest into an ABLE account, or she could split between a special needs trust and an ABLE account. So options. Why would an individual split between an S&T and an ABLE? Well, they work together, and they work together quite efficiently if the administrator kind of helps guide. So a third party or payback trust can fund an ABLE account. So remember, distributions may be made from an ABLE account for food and shelter and will not cause a reduction in SSI, contrary to the trust paying for food and shelter, which would cause a reduction in SSI. So again, let me go back here. So again, your trust, your special needs trust, could fund your ABLE account. It could fund your ABLE account up to $16,000 a year. Now, anything that your trust puts in would count towards that limit. So if you have a parent who's also putting money in and the trust is putting money in, they both will count towards that $16,000 a year limit. And then, you also have, if the individual's working, they can put the additional $12,060 in there. So the huge advantage for ABLE accounts, not only is, again, the ability to pay for the food and shelter, but also the enhanced financial independence, because for ABLE accounts, most of the time they use a prepaid debit card option, just like we use with TrueLink. It would be a separate prepaid card for qualified disability expenses. Again, when you're using that card, you better be saving receipts and being able to justify those expenses, because those are monitored and regulated by the state agency and also, the Social Security Administration, IRS. So it's important for the individual to kind of know, what appropriate spending would be. But also, again, the idea that they have the independence to access that money when they need it for what they need it for. So we have a couple clients who we utilize, the trust to fund their ABLE account when needed and when wanted. It gives them a little bit, the direct access to those funds that they need or want, but also allows us as the trustee to help monitor that and help guide some of those financial decisions for them as a circle of support with them. So again, let's do another compare and contrast here. So we talked about age limits. We've talked about whether the individual with a disability can manage it themselves. So for an ABLE account, yes, they can be, the signature authority and the owner. For a third party and a first party special needs trust, they cannot manage those on their own. Can they fund? Of course, with an ABLE account, yes. Third party, no. First party, yes. All of them allow maintenance and continuation of public benefits. We do have the limitation on contributions. So again, the ABLE account does have the annual limits, whereas in a third party and first party, whether it's pooled or private, they do not. The other thing important to understand about ABLE accounts is there is a limit on the number of accounts you can have, and that is one. You can have one ABLE account. For a third party trust or a first party trust, there is no limit on how many of those you can have. So Medicaid payback, again, this is a biggie. For ABLE accounts in Kansas, no. There is no Medicaid payback, just like third party trusts. For first party trust, again, whether it's private or pooled, Medicaid payback would attach to that. Contribution amounts, limits, we've talked about that $16,000 a year plus the $12,060 if they have earned income. The shelter payments without SSI reduction. And then, we've talked about Medicaid recovery, the SSI disqualification. ABLE account is the only one where you might run the risk of disqualification, but again, it's simply a suspension until that account reaches below that $100,000 again. And then this is an important one too I want to talk about, and that is the abuse or vulnerability of the account. So ABLE accounts, they do run a higher risk of fraud, coercion, disqualification from benefits, from misuse. They do have that higher risk because the individual has direct access to those funds. A special needs trust, that risk can be minimized if it's administered by a professional trustee. And then a pooled special needs trust, it is very minimized because it's a requirement that a nonprofit organization acts as trustee. So we oftentimes, families looking at, doing a standalone or a private, third-party trust, we often advise them to think about using a professional trustee or an attorney, whatever to act as trustee rather than a family member, because you do minimize that risk. And also you alleviate the burden for the family member, because we have a lot of families who contact us and say, can you please take over management of this trust? I don't want to have to tell my sister, no, you can't buy this. I feel like, I am simply a money manager and our relationship is suffering. That does happen with family, right? So by utilizing a neutral party to serve in that capacity, it oftentimes alleviates that family burden, tension, and allows family to just be family and not act in a financial or fiduciary role. So, questions. We've had a couple more questions come in as far as able accounts. So we had a question about pooled trusts and invested. So how are pooled trusts invested? That depends on each pooled trust company. So again, we utilize TrueLink Financial. When you sign up for a trust with us, or when you're thinking about doing that, we can provide you the information about how that is invested. With able accounts, you are actually able to kind of select how you want that invested. And, so there is some availability with that as well. And then I think that's it for questions so far. Unless we have any more, don't hesitate to put them here in Q&A before we go for the rest of the night. And again, if you have any other questions, please don't hesitate to call or email us. That is what we are here for. I do want to thank you all for attending tonight. Before you go, when you get a follow-up email from us, there is a survey that's going to be included on that link. If you want to fill out that survey, that just kind of helps us gauge how we did on the presentation, if we covered everything you wanted covered, as well as what future presentations you might want us to present. So please fill out that survey as it's sent out. So let's see here. All right, I'm not seeing any other questions for tonight come through. So again, I just want to thank you all for joining us. The slides and the presentation will be made available on our website. And again, if you have any further questions, don't hesitate to reach out to us. And we look forward to speaking with more of you. I hope you all have a wonderful evening. Take care.